Welcome to the Ontario Mortgage and Real Estate Insights Podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoan, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their home ownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode. Today, we're discussing a critical issue affecting the Canadian housing market, the home building crisis. Despite a recent surge in housing starts, the situation might be more dire than it appears. Steve, what's your take on this?
Well, Janine, the numbers initially seem promising. Housing starts hit a 3-year high in July, reaching an annualized pace of 294,100 units. But when you dig deeper, the picture is less rosy. Much of this growth is driven by rental units rather than home ownership units, which indicates a troubling trend for potential homeowners.
That's right, Steve. Kevin Lee from the Canadian Home Builders Association has pointed out that the market is heavily reliant on purpose-built rental and affordable housing starts. This means we're seeing a trade-off between rental and home ownership units. It's concerning that in centers with populations over 10,000, only about 4,128 of the starts were single-detached, compared to 19,336 in multi-unit projects.
And it's not just a local issue. The crisis is particularly severe in places like the Greater Toronto Area, but also extends to British Columbia and other parts of Ontario. Builder sentiment remains bleak, with the CHBA's Housing Market Index at low levels for both single-family and multifamily outlooks.
It's heartbreaking to see such a sharp decline in home ownership opportunities, especially when you consider the financial and emotional investment people make in owning a home. What's contributing to this crisis in Ontario specifically?
Several factors, Janine. Ontario is dealing with increased development taxes in larger urban centers, rising construction and labor costs, and the impact of international trade tariffs. These elements are making it economically unfeasible for builders to start new projects.
This really highlights the need for action. Kevin Lee emphasizes the importance of municipalities stepping up to address development charges. There's also hope for a GST change for first-time home buyers from the federal government, which could provide some relief.
Absolutely, Janine. Without these changes, reaching the target of 500,000 housing starts annually, as set by Prime Minister Mark Carney, seems unlikely. It's crucial for all stakeholders to collaborate and find solutions to these pressing issues.
The Canadian mortgage market is experiencing a significant surge, with mortgage borrowing increasing by 27% in June, marking it as the second largest June on record. This information comes from the Bank of Canada, which reported that uninsured mortgage originations hit 40.7 billion Canadian dollars. This represents an $8.77 billion increase from the previous year.
That's a substantial rise, Janine. It suggests a high level of activity in the mortgage market, but interestingly, it's not necessarily tied to a boom in home sales. Instead, it appears to be driven by the completion of pre-construction projects initiated during the pandemic's low-rate period.
Exactly, Steve. Many investors purchased pre-construction homes during the low-rate frenzy from 2020 to 2022. Now that these projects are reaching completion, buyers need to secure mortgages to finalize their purchases. This surge in origination seems to be more about fulfilling these commitments rather than a reflection of new consumer confidence.
While it might not signal a new wave of home buying confidence, it's definitely a notable trend. The Bank of Canada also highlighted that the average interest rate for uninsured mortgage originations was 4.59% in June. This is down from the previous year, allowing borrowers to leverage more.
That's an interesting point, Steve. Lower rates are certainly enticing for borrowers, but they're still not as low as the pandemic-era rates. It's a reminder that while rates are attractive, they're not at the historically low levels we saw a few years ago. Borrowers are opting for 3 to under 5-year fixed terms, which offer a balance of medium-term stability and low rates.
And that's a smart move, Janine. The market's current uncertainty makes the 3-year fixed term appealing, capturing 36.9% of originations in June. The variable rate mortgages are also gaining traction again as their rates fell to 4.53%, which is below the average for all segments.
It's a bit of a gamble, though, with variable rates, given the potential for future rate changes. But with the current economic climate, some borrowers are willing to take that risk, hoping for further rate cuts.
Indeed. It's a strategic decision, reflecting borrowers' expectations of the market. However, it's important to note that the surge in originations is possibly more indicative of the ghost of speculators past, rather than a new wave of consumer confidence. This is a follow-up from the investor-driven purchases during the pandemic boom.
Let's shift our focus to a recent development in the real estate sector that highlights some interesting dynamics. While some real estate investment managers are pulling out of smaller markets, Joshua Will from Virtus Capital Corporation is taking a different approach. He's seizing the opportunity presented by the current dip in the market.
That's a bold move, Janine. Joshua Will, the president of Virtus Capital Corporation, is capitalizing on what he sees as an opportunity to acquire properties at lower valuations. His firm, which specializes in multi-unit residential properties, retail, senior living, and office space, is actively buying in secondary markets like Parry Sound and Sudbury.
It seems Virtus Capital is embracing the potential for growth in these secondary markets. Will mentioned that they aim to build their portfolio based on cash flow rather than speculation. This approach could offer stability, especially as they focus on properties that can generate consistent income.
Absolutely, Janine. It's all about the numbers and finding value where others might not see it. While some managers are selling off rural assets to focus on major metropolitan areas like Toronto and Calgary, Will is confident that these smaller markets can provide significant returns. It's a strategy that requires patience and a keen eye for opportunity.
There's also an interesting development on the office space front. Will believes that the office market is starting to recover, driven by back-to-work mandates from major companies and government agencies. This could lead to an increase in demand for office space, which has been struggling since the pandemic.
Yes, Janine. It's a sign of changing times. The shift back to in-person work is creating a new demand for office spaces, which were largely vacant during the pandemic. However, it's important to approach this with caution. The market's volatility means that while there are opportunities, there are also risks involved.
It's a bit of a mixed bag, isn't it? While there's optimism about the office market, challenges remain. For instance, Trez Capital Mortgage Investment Corporation, a major player in commercial mortgages, recently suspended redemptions on some of its funds due to elevated redemption requests and ongoing loan obligations.
That's right, Janine. Trez Capital is dealing with significant pressure, and it's a reminder that the market is still navigating through some turbulent waters. Investors and managers need to remain vigilant and adaptable as they explore strategic alternatives to address these challenges.
Despite these challenges, it seems like there's a cautious optimism in the air. Joshua Will expressed a bullish outlook on the market, seeing potential where others might see risk. It's a testament to the diverse strategies available to investors in the real estate sector.
Indeed, Janine. The real estate market is complex, with various factors at play. It's crucial for investors to stay informed and weigh their options carefully. Whether it's taking advantage of a dip in secondary markets or navigating the evolving office space landscape, strategic decision-making is key.
Our next topic is a significant development in Ontario's real estate regulatory landscape. Joseph Richer, the Registrar for Ontario's Real Estate Professional Regulator, has stepped down after the collapse of iPro Realty Limited. This is a big shakeup, Steve, especially considering the role Mr. Richer played in overseeing the conduct of 110,000 licensed realtors and brokers across the province.
Indeed, Janine. Joseph Richer's departure marks the end of more than a decade of service at the Real Estate Council of Ontario, or RECO. His exit follows the revelation that millions of dollars were missing from the trust accounts of iPro Realty, once one of Ontario's largest brokerages. This situation has raised serious concerns about the oversight and governance in place to protect the financial integrity of real estate transactions.
It's a troubling situation, Steve. Brenda Buchanan, the CEO of RECO, stated that she supported the decision for Mr. Richard to leave, effective immediately. It seems that the board of directors is committed to transparency and accountability, which is reassuring. We need to ensure that such incidents do not compromise the trust homebuyers and sellers place in the real estate process.
Absolutely, Janine. The issue came to light when it was disclosed that Rui Alves and Fedele Colucci, the owners of iPro, had removed over $10 million from trust accounts meant to hold realtor commissions and homebuyer down payments. This money was reportedly used to repay investors of the brokerage's holding company and for general operations. It's a complex situation that requires thorough investigation and strong measures to prevent future occurrences.
It's disheartening to see such a breach of trust. The fact that these funds were legally protected makes this even more concerning. It highlights the need for stringent regulatory frameworks to safeguard consumer interests. Brenda Buchanan has pledged to work closely with RECO's board to ensure oversight, and I hope this leads to more robust protections for all parties involved.
There's also the matter of how this information was managed, Janine. The public was not informed about the shortfall until August 14th, despite the regulator being aware of it since May. This delay in communication has understandably led to questions about transparency and the timely dissemination of critical information.
Yes, Steve, and that delay can erode public confidence. It's crucial for regulatory bodies to act swiftly and transparently in such situations. The good news is that RECO has committed to reviewing this matter thoroughly, and Brenda Buchanan has made transparency her top priority moving forward.
As part of the resolution, iPro Realty is being wound up, and the founders have lost their licenses to trade in real estate. However, Mr. Richard confirmed to the Toronto Star that provincial offense charges were not filed against the iPro founders as part of the agreement. This decision has sparked debate about accountability and the consequences for those involved in such financial discrepancies.
It's a complex issue, Steve. While some might argue that losing their licenses is a significant penalty, others believe that more stringent legal actions should have been pursued. Ultimately, the focus should be on ensuring that the real estate industry in Ontario remains a trusted and secure environment for all stakeholders.
Agreed, Janine. It's essential to balance accountability with the need for systemic improvements that prevent such incidents. As we move forward, it will be interesting to see how RECO enhances its oversight mechanisms to protect both the public and the industry's reputation.
Absolutely, Steve. It's a reminder of the importance of vigilance and integrity in the real estate sector. We'll be keeping an eye on how this situation unfolds and any steps taken to strengthen the regulatory framework in Ontario.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder. Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your home ownership goals. Catch you next time and stay informed with the latest industry insights.